Hey everybody, it's Adrian Zdunchik, CMT Charter Market Technician, CryptoBurp, and I'm here joined today, that's an honor, to be joined by Jason Denis of our incredible partners at Credbull. Some some people may know Credbull under X at Credbull DeFi, Credbull DeFi, right? Where by the bio itself, it actually speaks that the community would have an opportunity to lock in 10% APY with fixed yields on stablecoins lending. That's all about the being all about that being licensed, secure, and stable. Unlike most of the other cryptos, unlike most of the other projects, unlike most of the other scam ventures that you see in the crypto that is crypto is so full of. And well, we're gonna have a lot of room and a lot of great space to talk today about tokenized funds, about decentralization, about solving liquidity problems, partnership that may be right around the corner. And that's all with Jason Denny. Jason, my friend, how is it going? How are you feeling today?
Feeling great. Thank you for having me on the show, Adrian. It's good to see you again.
My man, it's such a bummer actually that we only saw each other in April, and before for everybody's information, Jason and I had a couple of words before the show, and ultimately, time flies so damn fast. It's so ridiculous. It's so incredible, and especially just like we spoke, anything can happen. Anything that happens in crypto is just lightning fast. It's so much faster than it happens in a traditional finance. So, like if you were to just give us a little bit of a of a sweet reveal before we reveal the further details. What's good has been going on with Credbull the last 2-3 months?
Gosh, where do I start? First, let me tell you a little bit about Credbull and some of the products that we launched and some of the partnerships that we launched as well. So Credbull fundamentally is we are a licensed on-chain private credit fund, right? So we are quite different from what others claim to be a tokenized fund, which remain primarily an opaque centralized fund. So we manage our own RWA, if you will, right? So we're an asset allocator to these SME originators. These are large fintechs in SME lending. And we manage it on-chain and off-chain. All data off-chain is visible back on-chain to our lenders so they can see fully transparently everything that happens both on-chain and off-chain. So fully transparent and accountable to our investors in real time. Now, that allows us to launch a number of high-yield structured products, right? We launched 3 months ago our core products, our kind of inaugural core products that offers 10% fixed yield. And we're offering also 30% carry on the participation of the fund. So that can take you 13, 15%, right, annually. That got the attention of a lot of investors. We had the good fortune of Plume Network in partnership with Centrifuge. We launched a partnership while we were at Consensus in Austin a couple of months ago, with Plume joining the fund as an anchor investor with the first 10 million in TVL. So we're super excited about that. And that kicked off the institutional side of the fund. And we've got a pipeline of a growing interest. In 2 weeks' time, we're launching the retail version. Okay, now the retail private credit, as you know, Adrian, is a highly exclusive asset class, right? And there's a lot of private credit platforms out there. But we take the best of the market in private credit and TradFi, bring it on-chain, take the veil off, and offer the same terms that we offer institutional investors to retail investors in a permissionless way. Now, what's really cool about what we do is that we're not deploying capital in other people's products, right? We manage our own fund, which means that we will be launching many, many different types of products. And maybe I'll share a little teaser, Adrian, on our upcoming products that are even more exciting than the initial. We're launching in Q4 2 new products. One is a structured senior high fixed yield at 15% fixed with the potential of full 1x leverage 1x LTV, yeah, 1x LTV. And then the second is a junior tranche with 20 to 22%. Okay. Now, the last point I'll make is that how we think about yield is not to maximize the highest possible yield. That's not what we do. We maximize the highest possible risk-adjusted yield, right? So this offers a diversification strategy, if you will, or a hedge against the volatility of the crypto market, right? And I think that's where the market's heading. We're not looking to compete with the crazy high yields that spike up and drop down. We're consistent, regardless of what the crypto market does. We offer the same yield, and offering 20-22% in the junior tranche, regardless of what the market performs, is going to be a core part of the broader RWA market.
Got it. That's so well put through right there, and that's so well explained, Jason. What I'm thinking ultimately is, if we take things seriously and to the very core regarding the tokenization, the centralization, those are big words, those are big fancy words that many people use, that are hiding there on the back end while, and this often is an academic dispute, such as to which extent the markets are efficient or inefficient. Let's talk about the funds tokenization versus the funds decentralization ultimately, because it all paves the way somehow, to how the lending protocols work, to how the stable coins ultimately get the APYs at times. Those are different mechanisms. So why don't we discuss the tokenized funds versus decentralized funds? What is the difference, Jason?
Yeah. So think of all the media stories that have been launched recently, talking about Larry Fink at BlackRock and Fidelity and Franklin Templeton and the entire Wall Street looking to tokenize their fund lineup. Now, when they talk about tokenizing their funds, they're talking about operational efficiency. They're talking about tokenizing the subscription agreement. That's it. They're talking about increasing the profit margin. That's it, right? And streamlining the life cycle of the investment process. That's it. Those guys have no interest in giving you a look through or transparency into how they manage the fund. Why? Because 85%, Adrian, 85% of active asset managers underperform their own index every year. $100 trillion asset class. So they're not about to give you a look through on how they manage it. They're still managed in a highly centralized, opaque fashion. A decentralized fund gives you, when you lend into it, it's a licensed fund. It gives you a claim token that you have self-custody over that says, I owe you this much and plus this yield in such time. So it is a token-driven fund in a way, but is it decentralized in the sense that the capital is deployed on-chain? Now, ultimately, because it is RWA, it needs to be deployed off-chain at some point in its life cycle. All data, all metadata off-chain is deployed back immutably on-chain with full transparency of all activities 3-4 degrees out off-chain in real time to our lenders and investors of the fund. So there's full accountability and zero gap between the stated strategy and risk controls and the actual deployment of the capital and performance of the fund. So the entire life cycle of the investment process, from deployment to recapturing of the investment, plus the yield, is fully visible. So we are accountable to you to ensure that we are managing your capital in a way that we say we're going to do, and monitoring risk within precision, within surgical precision, in real time, right? So we're active managers, so we're constantly reallocating capital to ensure that we meet our stated objective. And that's the difference. Centralized, opaque, tokenized, transparent, look-through, decentralized. And fundamentally, I always say a tokenized fund doesn't make it a decentralized fund. And I think the media doesn't really kind of cover that point, because it's not really a narrative that's being driven by Wall Street. It's a narrative that we need to drive from Web3, because look, Adrian, those guys in Web2 and TradFi, they have a bigger microphone. They control media, right? The broader media, right? 90% of the market. So they can kind of control that storyline. They effectively have stolen the narrative from us of leveraging blockchain technology to drive, right, more, better performing, financial products. They're using it for operational efficiency. That's it. That's not what blockchain is really. I mean, yes, it does bring operational efficiency, but that's ultimately not really what it's supposed to offer. It's supposed to offer broader access and liquidity. So we
It's
need
one
to
of many, right? Isn't it?
It's one of many, exactly. So we need to bring back that narrative to say it's not enough to be a tokenized fund. You got to be a transparent, decentralized fund.
Got it. Yeah, yeah. I mean, I'm with you ultimately, and what it does as well. Well, I fully agree with you, Jason. Is that it doesn't kind of like make it to the headlines, right? That tokenized funds are not necessarily equal to the decentralized funds. It's not a fancy, it's not a fancy discussion, right? It's not a fancy topic for the discussion. It seems for the mainstream media. Well, I cannot blame them for that ultimately, because if one is corrupted, I cannot expect them to act as if they were not, right? So, so we do have this strange where whoever holds a bigger microphone, just like you said, Jason, they do hold more power. At times, that is fully unjustified. However, speaking of the actual values, the benefits, which we are agreed, Jason, you and I, that is just one of many, right? Too, that it's helping boost the efficiency on the operational side. Ultimately, it's also solving liquidity issues, right? That the Web2 fresh traditional finance is often so full of, right? Let's talk about that. Like, how does Credbull approach? What's the attitude for the approach of solving the liquidity issues?
Yeah. Thank you. Great question. So we think of liquidity in three ways. So first is that while other RWA projects focus on, capturing liquidity or TVL within the Web3 ecosystem only, and it's, as you know, in the recent kind of the last 2-3 months, it's been a shrinking liquidity ecosystem. We focus on growing it. So we are also interested in bringing fresh new capital, fresh new liquidity into Web3, right? We are a Web3 fund first, but we realize that for us to grow and build a vibrant, ecosystem, we need to grow it. We need to grow and expand and increase adoption. So we want to attract fresh new capital from Web2, who have been sitting on the sideline, and maybe with some PTSD from the last bear market, to bring them in and attract, with institutional grade RWA. So that's one. Second is composability, right? So having that claim token, that LP token that you receive, is for you to be able to collateralize it, right? On liquidity pools such as Aave or Compound and others, and draw down an LTV of 50%, 60, 70%. For that to happen, though, you need to have full price discovery, right? Which means that you need time and traction for the liquidity pool or the market maker to be able to assess the underlying risk and price that risk, right? And so that's the interest that you pay on the yield that you pay on the loan that you take. And third is that, and this is really more within our control, and this is kind of, we're moving on this also in the shorter term, in addition to expanding the pie overall, is sourcing liquidity ourselves and providing it directly to our lenders. So on the structured high yield, you can select, I want to take up to 70% LTV. So you can deploy, a loan into our product, let's say 6 months or 12 months, to hedge against the market, right? BTC takes a dive by 20-25%, and you want to capture that trade, you just click of a button and draw down 70, 80, or up to 100% LTV, and then you buy BTC because it's dropped down to 53,000 from its high of 73. So that opportunity of locking, but still be able to draw down an LTV is very important for us, and it's important to the market. So that's what we're rolling out. So those are the three that we're thinking about. I would say the one that is a bit more complicated to solve for and will require more time is the composability. But we think about LTV and liquidity in three stages. So that's so we're looking to solve this. Yeah.
Okay, so how does it all connect with what you have in store for the retailers ultimately, right? Because the mini games, that there is a very kind of like a big aha moment for the crypto, the wow factor, is that the simplicity it takes to earn points, to earn money, to earn airdrops for taking part in very simplistic, very simple games out of other terms, right? So
Yeah.
what's the retail approach from you, Jason, from Credbull as an organization?
Yeah. So we're launching a really cool, very exciting, one of a kind gamified platform and private credit. I mean, it doesn't exist in the market, called Incredible Earn. Okay. And, my CMO might get upset at me for actually sharing too much here, but all I have to say is that it is going to be, so, private credit and investing doesn't have to be serious, right? You can gamify it and people can have fun with it. But it's meant to kind of teach about different investment strategies in a fun way where, kind of offshoot of click and earn. We're doing spin and earn, where you earn points. Is it A or B? And you click on the answer multiple times and so forth. That earns you points. We're going to have a super casual game. We're going to have different competitions, leaderboard challenges, and that earns you points, right? And those points turns into tiers, and you get rewarded with our utility token that we're going to be launching. We're kind of gearing up for our TG in September. And it's really exciting. So if you lend with us, right, even if it's just 100 USDC, you can get up to 30, 40, 50% total rewards, right? That's from the 15% fixed or the 20% on the junior tranche, plus an additional 30% our token. The more you engage, the more you earn. So that engagement creates value for you, for the community, for the ecosystem, and we reward you for it, for being part of our community. So it's going to be a lot of fun. We're launching it in stages. July 22nd is going to be the first kind of mini game that we're launching, and then launching the full platform and a series of micro launches. And the full platform is being launched kind of first week in August. So we're super excited about it. And so I don't know if I can share more, but that's just a teaser. But I think I've shared more than my CMO would like me to share at this stage. But we're super excited about it.
That's always a struggle to reveal a secret without dropping too many beans out there. I fully take you on that, man. Speaking ultimately of positioning yourself, you said you want to launch the utility token in September, later this year. That definitely, while the seasonally weakness is typically there, the Jeff Hirsch, my good friend, who's a godfather of seasonal studies, ultimately, his father and himself, they build a framework for the seasonal tracking ultimately throughout the year, for the calendar year, how does it all connect with the 4-year stock market presidential cycle, for instance. It seems that we do have a lot of heat waves and a lot of interest lining up, just like you noticed towards the later part of the year. Vacation typically is a little bit slower. People take time to chill with their drinks and just sit on the sand bath and enjoy. And that seems to be a wise choice to push definitely the token side, all the way to when the market rips off better and more, because that's what we know it's capable of doing. Let's talk about, for a very brief moment, about your very kind of own growth expectations, right? Because you have a lot of going on, you have a lot of partnerships, some of which you have shared slightly. Um, what do you expect out of Credbull at all? Let's say this year, next year. What would you say is like your personal dream come true, the best case scenario situation for Credbull to catch on fire?
So we have a very targeted, I would say, go-to-market strategy in who we are. So there's two prong approach. One is the institutional side, um, and that, Adrian, we have been overwhelmed by the response of that segment. Like we are having constantly having constant discussions with inbound requests from the largest Dow treasuries in the space. So we've been grateful because it's been validated by the market that there's a need for our product to hedge against the volatility of multi-billion-dollar treasuries. So we have literally done no outbound BD yet. It's all been inbound. So we've been grateful on that. So we have pretty aggressive targets in TVL there. I would say when you look at kind of private credit RWA, it's stagnated in terms of the current players or what they offer. Our targets in the short term exceed what other players have had over the last 5 years, right? That's our 2-year target, exceed 5 years. So our 3-year target is north of 500 million in TVL. That's just from Web3. We haven't even touched attracting fresh new capital in. Okay. So pretty aggressive targets. Now, the other, closely held kind of, I would say, go-to-market and KPIs is on the retail, right? So we want to have 100,000 active users in the very short term and over 1 million in the near term. And not just registered wallets, these are active users on our platform because we plan to continue to innovate, right? So these are not launch it and fine tune the edges. Every month we're going to launch a new game and new kind of product feature to encourage people to come back and engage and have fun and share and lend and so forth and get rewarded very handsomely. Because ultimately, that retail segment is what creates vibrancy within Web3. And
Mm.
and and for us, private credit shouldn't be just for institutional investors. We're offering the same terms, same product terms, same features, same benefits, everything to retail as we do for institutional investors. So those two kind of approaches for us, institutional and retail, are super important. And I'm blessed with a phenomenal team that they execute with great precision, and they're quite passionate about what we're trying to achieve around providing access, liquidity, transparency. So we believe in what we're doing, and that helps quite a bit. When you go through 18-hour days sometimes, because being in crypto is not always easy. Like you mentioned, 1 month in crypto is really kind of the equivalent of 1 year. I come from TradFi background. Although I've been in crypto the last 6 years, my 17 years in TradFi seems like a footnote compared to 6 years in crypto. I've gotten a lot of gray hairs in the last 12 months as a
Well, at
founder.
least you have some, right?
That's very true. So, we're really excited about the next 12 months. We have a 3-year vision, but we execute, month by month, quarter by quarter. So we're super excited about it.
Love it. And for everybody willing to learn a little bit more even about, the roadmap itself, that is quite spectacular. And I fully align with what Jason has just said. We are at all private to, we are at all privileged, I wanted to say, that Credbull and the Burb Nest, have joined the forces together to just give a little bit more education information. Education is where it starts, right? Ultimately, attracting the masses into crypto has always been an eternal battle. However, with the right educators and with the right mission behind a project, just like you shared for the roadmap for 2-3 year plan, realizing that actually 5-year plans, in a very short period of time, activating thousands, hundreds of thousands, and millions of users, organically, something to worth fighting for, and that's possible. All that is doable. All that is possible. And I do want to welcome everybody so that you go ahead and visit the Credbull website at credbull.io, something that you can definitely familiarize yourself closer to the system, closer to the project. We are truly honored and privileged, like I said, to be partners. And there's a lot of good things coming up. And well, one thing that I can encourage everybody else before we start wrapping the show with Jason Denis is that you might want to consider ultimately also visiting their incredible Twitter page, X page, if you will, because ultimately we do have a couple of very good, very good, not only viral tweets. Ultimately, you're very good at writing and preparing the threads. That shows. It's actually a lot of, like you mentioned, hedge against the volatility type of approach, right? And this all comes with the fully licensed, secure, stable environment that is missing otherwise in this space. So something I'm truly grateful, and that's something that I appreciate as a trader, as an investor. And while you're actually, for all everybody who's listening and viewing this right now, so that you might want to consider head to X account of Credbull. Like I said, I gave the handle before. It's at Credbull DeFi, at Credbull DeFi. How much I like this handle itself. And while you're there, do make sure please to follow them as they continue their endeavors. And this is definitely worth watching. It's a spectacular watch right there. And ultimately, if you were to get us a little bit closer to the golden thought, something that is going to help us, the viewers, listeners, get positioned, get their brain tuned, get their brains tuned basically for what's coming into into Credbull ultimately in the next months, what they can expect. What would you say? What would you say? Taking for instance this summary documentation, um, ultimately the DeFi correlation. What would you say the golden thoughts might be?
It really it's there's so much information, on our light paper that we recently launched. I would encourage folks to kind of go through it, really, have a read through why we do what we do. So it's important to understand the why, not just kind of what we offer and how we do it. It really is to ensure that you have investors, lenders have the opportunity to hedge against the market, and that's really important because we've seen a lot of folks, lose their life savings. And look, we're not saying that deploy all of your crypto into Credbull or high fixed yield, but have a portion of it, diversify. And Adrian, I would go also, I would encourage people to visit our tokenomics and our incredible earn. Everything's in there. Our tokenomics are, I would say, kind of among the best that we have designed in the space. We've got an entire token ecosystem designed that you can see here in a graphical form. All of this is centered around Incredible Earn, the gamified platform that I mentioned earlier, to create engagement, high rewards, and ultimately a lot of value for the entire ecosystem. So we're really excited about it. So there you go. So that is a kind of what I call kind of the flywheel effect that creates value, creates engagement, and ongoing engagements, right? So the more engagement, the more value is created. The more value is created, the more engagement is created. And it's we spend a lot of time as a team thinking through it carefully and getting a lot of feedback from the market. And we're really excited to be launching this. So, in September, in mid-September, we have teamed up with the tier one biggest launchpad in the space. We're super excited about it. We'll make an announcement on that shortly, and we're looking to launch our token on likely 3 tier one exchanges on day one, end of September. So you'll be hearing a lot more about that as well. So I would encourage folks to kind of have a quick through our light paper, and happy drop us notes on our X account. We're happy to answer any questions or in our Telegram group.
Right on. Uh, if you are too uncertain, for instance, and try to type in manually, feel free to go ahead and search over one of the latest tweets, beautiful tweets, on the Light Paper Now live announcement from July 4th, and that's actually where we have the link. Read the full Light Paper, and well, like I said, there's a lot of good things to be said about the entirety of the endeavor and then endeavors. Well, Jesus, English is difficult at times for us Polish people. Uh, you know, it's a true blessing to have people, to have leaders like you are, Jason, who are there with vision, who are there with equipment, who are there with the right tools, with the right education experience, like you mentioned. 17 years in TradFi, wasn't it? Right. So that is quite a heavy load of experience that very few people in crypto would have for the uh, arguably immaturity of the entire industry. Right. So if we are ultimately to um, park us, for the audience, and leave this one final golden takeaway thought, call to action. What's it going to be, Jason, from your end?
Keep following us on Twitter. Keep following us on X. There's a lot of exciting announcements coming up you do not want to miss. This is really like the next 2-3 weeks is going to be the start of an incredible journey with our community. And I would say I'm probably overshared, to be honest with you. I'm going to get in trouble with my team, but follow us on Twitter. Keep an eye on all of the announcements, and there's going to be a lot of exciting products, gamified products. I mean, it's just partnerships all being rolled out in the next 3 weeks.
I mean, for those paying attention, in the word incredible, the credible actually is there present. That's what I love. That's what I love for the passion as well. And I have a lot of admiration to you privately, Jason, as well, and professionally both,
Likewise.
because you've shared an excellent wealth of wisdom and knowledge and experience. Something I'm truly grateful, and it's always great to talk with you, my friend. And ladies and gentlemen, it's been true privilege to be a host for today's session with Credbull. Again, quick shout out to our incredible partners. We are truly honored and privileged to join the forces. Because if people like Jason Denis are with us in the industry, then who's against us? Who can oppose such a force? Something worth thinking about and considering. Thank you so much, Jason, for coming over to our show, and beautiful wishes to all your entire team.